All right, we are connected for the Friday edition of the Morning Check-In. And man, what a morning it is. It looks like the MAGA Wealth Effect is in full effect as Jerome Powell appears to cave and hint at the idea of cutting rates in September. So it is going to be a doozy to say the least. Right now, I'm looking at everything that a person can invest in is in the green right now. Banks are doing well, you name it. So it's going to be interesting, man. So I'm going to go through a lot of headlines, share my 2 cents on some things, and basically just talk about what to expect in the days ahead. Because ultimately, with all this euphoria that's coming, we're going to see historical days in a variety of things. And the goal is, of course, to be positioned in things that you believe in, and then also willing and able to profit in things that can help you better strengthen the positions that you believe in. So we're going to talk about that a lot more. But anyway, for those who are plugged in, definitely welcome. Definitely looking forward to connecting with you. Feel free to share thoughts, ideas, suggestions. If you're new, make sure you hit the like button right now. Take a second, bless the channel with the like, and then also feel free to draw some thoughts, ideas, and comments and anything like that. So right now got me all kind of fired up and all excited, looking at the price of metals do well, looking at crypto making a boom. Man, it's just the monetary spigot is going to be cut on. And when it's cut on, they're going to flood the world with cash. Therefore, your dollars is going to go down, but everything else will appreciate in value. And so having a strategy is going to be key. Anyway, we're going to talk about that a lot more. And so for those who are plugged in, let me know. As I mentioned, where you watching from. Definitely want to connect with my people, show you some love, and share some thoughts, ideas, suggestions with you. We're going to have fun. So let me make sure everything's going smoothly on my end here. And then I will get into the primary subject matters of the day, because it will be a doozy. All right. So we're going to talk, go through some headlines, man. Right now I'm looking at the news, lots of headlines, lots of interesting topics, as well as in the Twitter sphere. A lot of people are sharing their 2 cents, trying to make sense of what was said, even though it was still Fed speech, so you got to decode it. But with Polymarket also predicting that there's been a surge in expectations for a rate cut, the question then will be, if it happens, how big? Will it be substantial? And will they be consecutive cuts throughout the remainder of this year, as some of the banks kind of hinted at? So that's the primary subject matter, my friend. Okay, so let's not wasting more time. Let's get into it. So I'm going to go through all types of headlines and then, of course, share my 2 cents on it so you can get a alternative perspective on what to expect. So let's just start off with just some of the headlines. I'm gonna race through all types of headlines so you can see what I see here, and we're gonna have some fun with it. So let's get right into it. All right, so let's just look at some headlines. We have Fed Chair Powell opens the door to a September rate cut, and Jackson Hole's speech says economic outlook may warrant change in a stance. May. Think of that word, may. Just one single word, may warrant a change, is enough to get people excited, because they can't be direct and blunt in saying that, but just the word may is enough to get people excited and to expect some type of cut. Next one says Wall Street has best day since April on Fed signal. Wall Street had their best day since April. Next one, what we got here? U.S. bank stocks head for first record in 3 years on rate cut bets. And then the next one, let me just give you some more. Dow soars 88. I'm everywhere. Dow soars 800 points to a record as Powell's speech sparks broad market rally. And then the next one, let me give you this one. It says Wall Street jumps more than 1% after Powell hints at a September rate cut. So just from those articles alone, that is more than enough to get things rallying. And at the end of the day, what we're experiencing literally is what I consider to be an outright Federal Reserve capitulating from their previous stances and supposedly the narrative of price stability and maximum employment. There are two mandates. Because when you think about those two words, those two phrases, price stability, what exactly does price stability mean in a world where consumer price increases, aka what they call inflation, always goes up because there's a never ending to the expansion of the monetary supply. So there is no such thing as price stability, because the more currencies created, the greater the cost of those goods that are all competing for that same amount of currency which is going in, which has been created. So basically what I'm saying is cost of living going to increase a lot faster once the spigot is turned on. So therefore, the cost of living in general is going to become more of a burden on people. So mind you, majority of people do not own assets. Majority of people are up to their ears, if not drowning in debt. And so those individuals that don't have anything already that will be the benefactors of all this currency will be the ones that hurt the most. So the haves will get richer and the have-nots will get poor. And as a result of that widening of the wealth gap that's about to come in the next couple of weeks, that's going to start when that spigot is cut on, you better believe this administration going to have to address that. So therefore, Donald Trump will get on stage at some point when it becomes obvious that not everybody's benefiting from what I consider to be the MAGA wealth effect. And so let me just give you that again. So for those who are new, you never know, but I have to give people a greater understanding because before his presidency, I turned this phrase called the MAGA wealth effect. And so on the screen here, you can see exactly what I'm referring to. And so literally a part of his presidency is to help transition and restructure the monetary system, which is what they're doing. And so, of course, this little lever here is pointing to green, which right here, as you can see, the crypto space is the preferred method of digital distractions because it plays hand in hand with what they're trying to do. And so, of course, this building here, for those who may not know, this is the NSA building, and this is the NSA logo. So the surveillance state, the digital trap that's being set up will even grow bigger because of all this activity taking place. And also September, we're expected to get the Clarity Act, which is going to provide greater framework for this. So not only will the banks be involved, the private investors will be involved. Everybody named Mother, the Trump family already got their bags ready to go and be pumped. So this is going to take off. But as a consequence of our currency, this dollar, which is all this is, they're going to flood the world with these things here. It is basically the digital and paper version of this. That stuff on the far end, as you can see, that shiny stuff will reap the benefit because they're destroying this to pump this. And those who hold that on our far end as a hedge against all this stuff here will have what I consider to be a permanent insurance against all this other stuff. So this is the MAGA wealth effect, which I have always believed is a part of this administration's policy. Why? Because simple. We're on the last leg of the Federal Reserve note system. And so as a result of this change in policy that we're witnessing eventually from the Federal Reserve, what will come from that is they're going to restructure and reboot this entire system. And that's why the whole stablecoin and all that stuff is a part of the equation. And it looks like Bessent, the Secretary of Treasury, he is more involved now in his rhetoric. So some type of collaborative efforts between the Fed and the Treasury is coming real soon. And so it's going to be interesting because literally when they cut the spigot on, that means that the purchasing power of our currency will just drop that much faster. And the world sees this. So the world has to protect themselves. And as a result of them needing to protect themselves, that's why we're going to see record-setting days. We're going to see record-setting days. And what do I mean by that? We're going to see record-setting days on an international stage in these two metals right here. So while the U.S. and all our Congress people are so excited about the digital side as a part of the distraction, they're going to try to pump that. The Western Hemisphere is pumping the digital stuff. China, Russia, and everybody else, and especially the BRICS nations, and everybody who has a lot to lose, they're going to be continuing to run to these things right here on the screen. And so literally, silver just took a slight cooling off because it was going too fast. And of course, gold as well. So clearly they didn't want this to get out of hand. And so here come the bullion banks, the paper shorter, the paper manipulators to drop this. But let me see. Let me check another industry to see how well it's doing. So right here on the screen, we got the crypto bubbles. And as you can see right now, these bubbles behind my head, they're on the move. And so let's see what we're looking like. So as of now, Bitcoin, let's see if we got the same type of movement in Bitcoin. And so as you can see on the screen here, we have Bitcoin got up to 117,184, and it too has turned the corner a little bit. It's come down to 116, And so as of today, it's up 0.6% on the day, 3.5 on an hour, 0.6. And so it looks like both gold and silver. So clearly, from a trader standpoint, people are taking profits because they either anticipated this or they're just taking taking a little bit of extra off the top while they can. And so we got, as of now, we got Ethereum is at an all-time high-ish, and it is up in the green all the way across. So today it's up 9.5%, on the week 4.9, a month 29.4. And so the reason I highlight all these, because these are the chosen methods of where that monetary spigot that's being turned on, where their currency will go to, on top of other things, of course. But clearly we're in an environment where the MAGA wealth effect is about to start. So what are my predictions? Let me give it to you. So here we have, gold and silver is what I primarily focus on, because those are monetary hedges that have an historical background to them, and they will prove to be, I believe, the last thing standing that is of value to some, but not everybody, because most people will eventually shift from the metals, especially the younger demographics, and go into the digital side. And then down the line, everything will reveal itself in time. Just be patient. But at the end of the day, gold and silver is getting ready to set some historical highs outside of what has been taking place over the last 8 months since Donald Trump has been in presidency. So keep in mind, all the temper tantrums, all the yipping and yapping, all the name calling from this current administration. If I just go back over last year, so literally, as we can see on the screen here, gold has been moving since. Since Donald Trump came in office. So look, it was during Biden's last little exit years over here to the left. This Biden's last couple months here, it was progressing as a result of the foolishness. But look at the sudden change under the Trump administration. So literally, you can't make this up. This is not science fiction. Literally, since Donald Trump came in office, right here, everything above my head is a result of geopolitical tension, uncertainty, the tariff narrative, which of course I've mentioned that before. It's a part of the framework for executing a restructuring. It's putting so much pressure on the markets to where the tech side of things is forced to step up to the plate. And the primary focus has been on things that, for the most part, don't even concern the average Joe or Jane, because, as I mentioned when I started off, most people don't own anything because they're in debt up to their ears, up to their eyeballs. And so those that are closest to this administration has benefited substantially from the tech side of things. And then the world. So listen to this. This gold rally is a world phenomenon where the world has chosen to go back to something true, tried, and tested. And of course, why? The Western Hemisphere here, all our mainstream news is talking about Bitcoin. And now Ethereum, the second golden child, is on the mix. And so Ethereum right now is doing better than Bitcoin. And so, believe me, it doesn't take much to just think outside the box. What's coming next? You're going to have, wait till, and this is the part where people are going to probably get excited. I believe that Ripple, XRP, because they're kind of like out of the doghouse now. They're working with the government. They're trying to set up some things, and all the stuff that they were going to do all along is still in full effect. So Ripple, XRP, and all the other altcoins will also benefit from this monetary spigot that's being cut on, because those projects are part of the foundational piece for this new digital technocratic state that we're entering into as a result of this MAGA wealth effect. And so there's going to be so much currency floating around. People who have it will go buy things. Perhaps businesses who are in trouble with their debt as well, they're going to refinance a little bit cheaper at times. They're going to borrow more. They're going to make it appear as if things are booming. So that's the whole point of the MAGA wealth effect. It's the illusion that things are doing good while under the surface our currency is being destroyed. And that, when it's obvious to the average American that what they've been working for, saving and hoping for on the international stage has been rejected, because the price of gold and silver go to prices that we can't imagine. Mind you, gold and silver is true historical money that's internationally no counterparty risk. It is the preferred method for reserves. It's obviously becoming that way. By the time the Western Hemisphere, i.e. average Joe and Jane here, realized that the wealth effect was to destroy this and for them to extrapolate all the remaining purchasing power out of this and have it absorbed into assets, the digital space in particular, because I'm not even trying to hate or be political and all this. World Liberty Financial, which is the Trump family's project, has positioned himself handsomely. They're going to be wealthier than ever, and every other person associated with this administration will be the benefactors of this wealth transfer. So the MAGA wealth effect is the greatest wealth transfer in human history, all centered around using the last remaining cents in this instrument here to benefit those who know what's going on and controlling this at the expense of those who don't, and will become the greatest casualties in monetary history when it comes to what happened with fiat currency, the death or the full rebranding of fiat, because the world already has solutions. Majority of the planet is already going to CBDCs as a result of whatever events come as a result of all this. Whereas in here, we're still trying to iron up the kinks. So stablecoin is what's being sold to us. But I believe, because a stablecoin is simply a smart contract running on a blockchain, that same smart contract, if you don't control it, the people who oversee and control that code, they also have the capabilities of tweaking the code for whatever purposes, implementing things that resemble CBDC-like, which is like a privacy, more eyes, more ears on things, and the ability to stop and freeze assets. So is that not CBDC-like? I don't know. But that's version 1. Mind you, we're on a long-term trend here, getting us towards the unfortunate desired outcome that won't be pretty for humanity at the end of the day, but there are steps to it. And along the way, they couldn't execute their agenda at enslaving the world, digitally speaking, unless they dangle carrots in front of people to make them feel wealthier. That's the thesis that I'm running with. Okay, so what I want to do now is I want to get on X and share with you some comments. There's a lot of people, excited, a lot of people not excited. Once again, it all depends on, you're excited if you're holding something that you think is going up. You're not excited if you don't hold nothing because you're up to your ears in debt. And now those individuals are the FOMO crowd that will be lured in, because if they're seeing everything that they heard about forever going up in price, Uncle Willie been saying about get silver. Now silver just hit $39 by the end of this month. By next week, it could be $40, given the current trajectory, barring any unforeseen events. If silver hits $40 next week, you better believe everybody that you've been talking to, everybody that know what you've been talking about forever, they gonna want to go out and get some, because they're thinking that they're gonna get left behind. So now what's gonna drive the boom even more are the ones who don't own nothing. They may take debt or sell off whatever they can to go try to get anything. Therefore, that's 1/3 of the population that don't own nothing. They're about to really ramp things up, which is going to amplify the boom, because psychology kicks in, So this is where things get very interesting, man. So I'm doing a lot of rant, a lot of talking. But if you take all this together, and I was to sum it up in one sentence, the MAGA wealth effect, which is the destruction of our currency, because we're in the last leg, it's going to help the wealth transfer, enrich the richer at the expense of the poor, and then they're going to reboot us in something else. Okay. That was interesting. Okay, so let me just give you some other things real quick here. Let me give you some other things that's worth paying attention to. So you saw the headlines, you saw the market activity, you see everything in their mother, for the most part, trending up as a result of just the sheer hint of the words may, may warrant, you know what I'm saying? And of course, that comes from political pressure. What's his name? What's that guy's name? Donald Trump has been so hard pressed on making sure that he has a presidency that goes down in the record books as one of the greatest presidencies ever. And he's been spewing that concept that the economy is so good, he actually needs people to start believing that stuff. So let me give you some things I bookmarked real quick, and we'll go from there. So Walter Bloomberg, who has 1 million followers, he just gave a little comment 2 hours ago. As a result, says Fed abandoning 2020 flexible average inflation targeting framework. So the question is, what in the heck does that mean? let me just ask an AI model what this could mean, and that will help give us a better understanding of what that very vague and uninterpretable outside of what we are speculating. Mind you, just using the words may warrant is a great speculative term, but then again, it could give some context. Okay, so let me just to get greater clarity, let's just ask a language model. It says, that same statement I put in, it says the Fed hasn't formally abandoned the 2020 flexible average inflation target, the FAIT framework, but in practice, it has already pivoted. Since late 2022, the committee has stopped using FAIT language in its statements and minutes. And last month, July, Fed Chair told Congress that the 2% target is back to being a hard ceiling rather than something to be averaged over the unspecified horizon. In short, they're quietly letting the FAIT framework die rather than issuing a public burial notice. So this is an interpretation of that statement based upon the data gathered from previous topics. And so if this what was compiled based upon previous Fed Jerome Powell mentionings, today, for the most part, solidify that to where the markets believe it. The markets respond. Wall Street believes it. And so think about this. All those who knew this was coming position themselves to benefit just from the small activity today. Maybe so, on average, say if everything went up 1%, 2%, 3%. And I didn't even mention, like earlier, my last live stream or last video, I talked about the S&P 500 and how earlier in the week it wasn't doing too well. And I talked about how the White House hinted at backing Intel with a turning grants into equity. So now you just look at the markets, S&P 500. Look, everybody, like the Magnificent Seven looking good right now off the sheer idea that liquidity is coming. So Apple's up 1.15, Nvidia at 116, you name it. Google's up 2%. We got Apple's up. So this is a result of the MAGA wealth effect. The mere mention with the word may warrant a pivot, meaning a cut, makes currency cheaper. Therefore, the expectations of people borrowing and spending and lending and all that other stuff that much greater, to the point where we went from all red, damn near, in the most important companies on the planet, to now all green. And imagine if it, when and if it kicks in the way that everyone is expecting, how massive their activity will take place in all sectors. And so let me just share another thing with you just from X, and then I'll get to some live things. But it says here, this is an hour ago, September rate cut odds spike from 74% to 90% during Powell's speech. And so literally, the poly market betting algorithm, as I followed it over the last several months, whatever, has been pretty accurate on a lot of things, to the point where like people literally are betting right now. This is the poly market, analyst chart is about betting. People are betting, and people are making a lot of returns off these bets, because this thing, the mainstream economy, the average Joe and Jane that's involved in these markets, that actually kind of more so from a psychological as well as a more realistic approach to how things would turn out, always seem to be right. So that's something right there. Okay, so let's look at a couple of things here. And then, of course, as always, for those, who are checking us out, feel free to let me know your thoughts, ideas, suggestions on where you think things are going to end up, how big of a cut, and what to expect. And also, let's just look at Mr. Peter Schiff, because Peter Schiff always seems to set the narrative in according to reality, not fantasy. So let's look at what Peter said. This came out about 50 minutes ago. It says, sell today's Treasury rally. Powell's pivot is bearish for bonds, as it will lead to a weaker dollar and higher inflation. As a result, demand for treasuries will fall fast just as supply rises thanks to soaring budget deficits. To control long-term rates, the Fed will revert to QE. And so just think about that. Based upon that statement there, with all this anticipated liquidity from the monetary spigot, as I call it, being turned on, asset classes will rise. Therefore, the idea of borrowing or lending to the government with these 3, 4, whatever percentage basis point returns on getting bonds is puny to what you can make in the equities and all the other products that are being served out there. So there's no need for the average investor to really support the government's debt bids at the time that they need more buyers. So as a result of that, he's saying there will be no average Wall Street Jane and Joe buyer because they're going to be chasing gain, chasing yields and other things. Therefore, the Federal Reserve will come in and then have to reload their balance sheet because they will end up buying these from the banks that the what's it called, the open market committee, that are the ones that, you know, supposedly buy these instruments and then sell them to the Federal Reserve, and they earn interest off of them. And so QE is coming. That's basically quantitative easing. They'll load their balance sheet up. They've been trying to unload their balance sheet as best they can from a historical high during COVID to now they've got it down somewhat decent, but they're about to reload that boy up. And once they load it up this time, it's no unloading it ever again, because there's never going to be a buyer after this, because the amount of currency that will probably come into existence as a result of the spigot being turned on will be something so high that it'll be a waste of time to even look at government liabilities, in my opinion. And so that's kind of how I interpreted what Peter just mentioned. And so let's just see what else is out here, because today is going to be an interesting day. So the question is, how do we end today? And here's another little comment from Peter Spina that where he's sharing his 2 cents. It says here, welcome to record gold and silver prices in Q4. Record. So literally, everybody who is in this financial space in the monetary world are all realizing what this means, what the words may warrant means to real world assets. More currency chasing fewer goods equals price appreciation of that item. So basically, pick anything that has any type of properties that's scarce and somewhat, not easily available or tradable. They're going to be the biggest recipients of this new liquidity, because there's always a dash to get into things that are the scarcest. And now that I think about it, knowing that platinum is more scarce than gold is good to say. This is just my observation based upon having been diving into this subject matter for so long. It's good to say platinum and palladium will probably set quicker, faster all-time highs than gold, because gold is, the ceiling for gold is for the most part unlimited, because it's a international wealth preservation vehicle for governments, wealthy families, all that stuff like that. So it can always have room to go. Platinum and palladium, more on the industrial side, is needed from the manufacturers to build, for the tech sectors to do things. And those two, platinum and palladium, are more scarce than gold. So the idea of more people clamoring to try to get a hold of physical is going to be that much greater. Therefore, the bids on these two metals here will faster, like bigger jumps per day, I believe, than what gold, because gold could just, incrementally continue to climb to records that we like just shocked and just keep going. Platinum palladium could just one day, because a tech company or a Chinese manufacturing automotive company need platinum for their vehicles, and all of a sudden they go out and just drop, give me 100 billion if they can find it, you know what I'm saying? And that price is, because these markets aren't rigged by the futures or the paper contract. So, and then of course we got good old silver just sitting there waiting for his day to hit 50 plus. But anyway, this is what's happening, man. This is real talk, man. This is really happening right now. The MAGA wealth effect is here. Powell is caving. You know, just off 2 words, may warrant is enough to get people excited. So now, you know, my short-term thesis is stick to what works best for you. Don't go out here chasing stuff, because if you have been heeding the advice of wise individuals for some time now, you should be positioned enough to where you are going to be able to insure yourself against the debasement to come and not become a casualty, as I mentioned earlier, for those who don't own anything, because there's going to be a time to probably unload some things as well. And then if and when there's some cooling off, that could be a time to reposition yourself, expecting more. As long as the spigot is on, then there's always room for more price appreciation. And ultimately, the goal is you don't want to be stuck just holding these things. Taking care of life necessities first and foremost, things that you actually need on a daily basis in the short term, and things you would like to make sure you secure for the long term in the tangible world, are ideal things to consider when you know that these are going to be the weapons of choice to enrich the rich. And that's why the wealthy go out and buy islands. They buy, 8, 9, 10 houses, things that will be absorbing all this liquidity, because that's just the best way to insure yourself against fiat debasement. But anyway, just share my 2 cents. Curious to see what you think. If you found value, as always, hit that thumbs up, drop a comment down below. And as always, for those who know what to do, if you're new coming across the channel for the first time, click links in the description. All types of ways to get affordable and impactful things that can help you along your monetary journey. But anyway, be blessed, be safe. Shalom.